Hello again, guys. This is Whatever You Say Man, and this is my latest installment of the Flat Broke Trading series. Today we'll be looking at the three main types of analysis, those being technical, fundamental, and sentimental analysis. We'll start things off touching briefly on the fundamental and sentimental. We'll finish with a more in-depth look at technical analysis. So, well, start off with a little bit of sentimental analysis. There's a few things that you can do when you're trying to get an idea. Well, first of all, I'll explain what sentimental analysis is. Basically, it's taking stock of how the public at large feels about whatever it is that you're planning on trading. Right here we have a search in Google Trends for Burst Coin, and we can see that over the past couple of years there's been a major increase in interest towards Burst Coin. The graph here is pretty clear and seems to be continuing in the same direction here. Looks good to me. So basically what that tells me is that the public is getting more and more into Burst Coin. What that does is creates more and more demand. Any market its price movement is going to be based on supply and demand. That's the one thing that moves the market more than any other factor. So the sentimental analysis is fairly simple when it comes to trading altcoins in particular. We can take a look at Google Trends. We can also take a look, do a similar search on Twitter, and we're likely to see similar results. We won't have the same graph, but we're definitely going to see a lot of action on and around Burst Coin and the interest in Burst Coin on Twitter. So I would invite you to go check that out. I'm not going to bother with that right now. After the sentimental analysis, we have what's called fundamental analysis. Basically, that's taking stock of what's actually going on with the coin. We are going to be trading coins, so we'll look at what's going on. Is there development? Is there an active community? Is there a future for this coin? These are all things that need to be taken into consideration when you're getting into a trade. Short-term, very short-term trade, you don't really care about the fundamentals. You're just going to be looking at points on a chart between which you want to execute your trade. So the fundamentals, you don't really need to get too far into it when it comes to altcoins. I would say take a look if you're thinking about investing in a coin long term. Definitely take a look on forums and whatnot, see what's going on. Look into development. Is there an active development team? If we stick with the same example, Burst Coin, it's pretty easy to get a feel for what's going on if we head over to the Burst Nation forum, burstnation.com for those who aren't familiar. Very active forum. If we scroll down to the side here, you can see there's recent activity in the troll box, and if we go down a bit further, a lot of threads, a lot of people active on those threads. Over 3,000 members. That's quite a bit. Newest members, you can see there's people signing up all the time, so definitely an active community. And we go over here, we can can see that there's definitely active development. Uh, Last update on this wallet release here was on Sunday, last Sunday, March 20th, not too long ago. All kinds of active development going on here, so it's pretty clear why there's so much interest from the public. Things are just looking good. From there, we'll move on to the technical analysis. This is where we're looking at the charts and analyzing price movement. Like I was saying earlier, all markets are moving primarily fueled by one concept: supply and demand. What the public's willing to pay for a product, or in this case a coin, versus what the people who own that product, or in this case coin, are willing to sell it for. There's always going to be movement between these points, and that movement will be reflected historically as well. That's where we are going to look to find our basic resistance and support points. Resistance being where the market's going to top out, and the support would be the floor, or where the market would bottom out in a given period of time. So we'll take a look at a larger chart sticking with the first theme. We'll go even a little bit larger than this. We're going to make some one-week candles. When you're looking for points on your chart that you can count on for the price to move back and forth between, you want to start with a wide time frame. Look at the big picture first. Generally, the closer you get to the smaller time frames, the more you're going to see noise. It's basically just movement between 2 points that you kind of lose focus of when you're looking at all the quick price action in between. You'll see what I mean as we get closer in. So if we go back, you can see here the entire history of Burst on Poloniex exchange. This here I would tend to ignore, simply because it's not really a reflection of what the market would normally be doing. We can definitely consider the high points here and use that as a possible high point for future movement. But again, the first few weeks on an exchange are not the best reflection of what the price is going to do in the future. There's a lot of hype and a lot of activity, and often it's followed by a lot of inactivity. So we see here exactly what I'm talking about, dropping from about 400 here, and in the first week of trading, almost 700. Looks like it did hit 700, and it didn't drop super fast, but it traded up here for a little while, and something happened. Everybody lost interest, and the coin pretty much died, except for people were buying at 10 burst, 10 Satoshi per burst. That's a very good price. So what we're looking for are pivot points, points where price turned around, and we're looking for correlation across time on the larger time frames, because that's going to be an indicator for us of where we're going to see possible movement in the future. So we can see there's a couple of points here that seem to become recurring. We might be looking at another attempt at 170 here very soon, even 180, and we could be looking at a move much higher than that very soon. This here looks very promising. It seems to be on an uptrend. So if we want to zoom in a little bit, we're going to start by drawing just a basic line. We're going to pick a horizontal ray so we don't have to worry about making sure the line is straight. It's just going to be straight for us. And we're going to pick a light color and a thick line, because this line is going to be pretty general. So definitely have a point here. The points we're looking for are less points than zones. Right here I'm looking at everything between 60 and 65. That to me seems reasonable. But anywhere between 60 and 65 is definitely, within that zone. So we'll go, actually I'm going to move this down a little bit more just to put it in between the two and see if we have something else that really sticks out. This right here seems like a pretty solid area between 143 and 150. So we'll put another line in here. Yeah. 143, 150, we'll go with 145. And we're going to look at what these look like a bit closer up. Right now, we're going to get another line in here on a smaller time frame, and then we'll take a look at why we put those lines in those places. Okay, so take a bit of a closer look here. We're going to see what those lines look like on smaller time frames. So, I put a line here at the bottom just for the sake of having a line where the lowest point was. It may or may not become relevant. We'll wait and see. I just want to know, no matter what time frame I'm looking at, where the lowest point was visually. So I help myself out by throwing a line there. This one here, we do see some bouncing around here. It touched here and bounced back down. It took a couple of tries before it was able to break through there, and even after it did, it eventually came back to this line here. This line seems like a pretty strong line to me. Move up to this one. See that it bounced off it here a couple of times. Tried to get back up through it, but bounced back down all the way down here. Came back up through here. Tested it again, tested it again, tested it again here, and broke through like crazy. But again, came down back to our line here again. So this line here is well, it's pretty clear why that line is there, I think. This seems to be an important price range. Moving up here, seeing another place where I think it would be important to make a note. Got it touching down here, coming back, comes back up to the line here, and bounces down here. So we can see that it likes this price around 100 Satoshis as well. And finally this line here that we made around 143, between 145 and 150-ish. We can see that it's pushing on this level here. It's doing it again here. And well, it's pretty obvious why that line is there. So I'm going to zoom in a little bit. We'll lower the length of time per candle here. Take a look at what's going on in the past week or so. We'll say the past 2 weeks, I'd say it looks pretty relevant. So we've got a lot of movement on our line here, on and around. It's normal for lines to be broken. We might have another important line to put here. I'm waiting to see what goes on with this. Right now though, you can see that it took a bit to push through this level right here. Tried it once here, got rejected pretty severely. Right here it took a couple of tries and it keeps coming back down to this line here, so I'd say the 120 mark is going to be an important level for us on these smaller time frames. So basically what we're looking at with these lines here is different areas where the market has decided that the price is going to become in some way steady, at least momentarily, or present some sort of barrier from being crossed. These lines are not invulnerable to trends. Of course, as we can see here, we're looking at the beginning of an uptrend here, so yes, there might have been some bouncing, but we had no problem breaking through these lines, and even 2 or 3 of them at a time. This all happened in a relatively short period of time, a few days. Stalled out here near our line anyway, and kept pushing on through. And it looks like we might push on through again, but we're going to have to wait and see. Might be a little too early to tell. So what we're looking at right now, these candles each represent 4 hours of trading. So we can see that there's been a lot of movement over the last few days, and the last few weeks really. We've got some levels here where we've got a lot of stability, where on the smaller time frames we're going to want to see our reference points again. And I can't stress this enough, these reference points are they're not a single price. We're looking at a range of prices here. So you know, this line here, this blue line that I put, you know, I could just as easily have put it there at 126 instead of at 127 or even at 125. It makes just as much sense. Same goes for this one. Could move it up here to 138. Or wherever in this area here. These levels aren't concrete. They are, however, the basis of a support and resistance trading strategy. So it's a pretty simple concept, really. You know, if you understand supply and demand, you understand this. You want to buy low and sell high, right? So if we're looking at a low time frame, you know, I know a lot of people like to be really active on the exchanges and get into lots of trades. If that's the kind of thing you like to do, uh, take a look at the smaller time frame after you've established your baselines and draw some more. I'm going to do these ones a little bit differently so that I can distinguish them from the lines I was drawing previously. So it's sorry about that. Damn. All right, I'm back. So it looks like we've got some stability around the 150 area. Throw another line in there. I think that would be important. Right now we're looking at 154. So it looks like we're headed back up to 158-ish. It could be 156, could be 159. And since we are looking at cryptocurrency here, you know, it could be 300. Who knows? I'm not saying buy all you can right now because it's going to 300. I'm saying keep an eye on any trade you're in, because any active trade on any cryptocurrency, same goes for any currency pairings in forex or any stocks or commodities. If you're in a trade, make sure you're on top of what's going on. You know, if we wanted to get creative with things here, it wouldn't be that hard to imagine putting another line here and another one here, another one here. Those both seem reasonable if we look at the previous price movement. We know that, as we see here, the price likes to test itself a bit before it goes for a serious break. So we may very well be looking at 200 plus prices very soon in the next weeks. We could be looking at even higher prices than that if we look at this level here. And if we zoom out even further, you know, if we really want to be optimistic about it, which personally I am, but you know, like I said, you never know. There are previous indications that we might be looking at some very intense price action soon, especially looking at this and seeing the bounce off this level here and seeing that it's making such a significant bounce. So we're going to zoom back in for a second here. Now on the smaller time frames, what does all this do for us? Well, it gives us an indication right away with our previous levels of the fact that there is a bit of risk involved right here. We could easily dip down past this level here and this one here and fall all the way back down to 120, 125. If you buy at 155 and it falls to 125, depending on your bankroll, that might be a significant hit. You might not be willing to take that kind of risk. There are measures you can take to prevent losing a whole bunch in that kind of scenario, though. So let's go take a look at Poloniex. We're basically looking at the same chart here. looking at the order books a bit, got a pretty solid wall here at 140. That's likely to be one or two or three individuals. Watch out for this kind of thing when you see it in the order books. This is what it looks like on the graphic below, and this here, 25 bitcoins right there with little support below it right up to 121, which coincides very nicely with the chart we made here. Kind of indicates to me that this is one person, or maybe two. That being the case, well, let me show you how simple it is. We'll put a low price, 120. I'll go all in. Why not? 120. It's not a lot, but for someone who has 25 bitcoins in their account, they can do this kind of thing. We go down and look. Yeah, okay, 120, 2.389, and all it takes is this. Where'd that go? 2.375. That's my order. Just pulled. This guy could do the same. And if that happens, how is the market going to react? We don't really know. So we're not going to take a huge amount of risk on this, right? Because what we're trying to do is make some money with a very small amount. So we're going to look at what's going on right now. Right now things are looking pretty good. Looks like we might see it turn around here a bit, but it doesn't really look like it. Looks like we're headed back up to the 160 area. Personally, I'm not going to place a buy order at this level. I do think it will bounce back down. I'm going to place a buy at 150, but not a large one. I'll explain why in a moment. So 150, since I don't have a lot, I'm not going to go with a huge order. We'll say 1,000 for the order at 150. We're going to wait for that to fill. We're patient. We're also going to place an order at 145. This way, we lower our average buy price if ever it does drop a lot. We're also going to, we're going to keep things in our favor a bit. And since I plan on pretty much sticking with First for my trading for the next few days, I'm going to place another low buy order. I say low, but it's not really. Like I said before, stay on top of your trades. If you see it going south, don't hold on to it hoping for it to turn around. Risk only what you're willing to lose. Okay, that's rule number one. Don't risk anything unless you're willing to watch it disappear in front of your eyes. That does not mean hang on to your trade until there's nothing left. That means set yourself a limit and respect it. You can do that with stop limit orders. Everybody who watched my previous videos went and checked out the stop limit order explanation here and knows exactly how to place them now. So we'll go back to our order page here. And I don't remember if I placed that. No. Okay, so going back to 130, gonna grab another 1,000, and I'm going to grab another batch at 100, hopefully. I do hope it drops to 100. That would be great. I'm going to grab 5,000 of them at that price. I'm putting a lot into it, but I'm confident that it's going to stay above 100 at least for now. By placing my orders the way I did at 150, 145, 130, as the price drops, I'm paying less and less for my 1,000 burst coins. That means the 3,000 that I end up with will cost me approximately 3, 4, 20 divided by 3, whatever that is. I guess 130. No, sorry, 140. So my average buy price would be around 140. If it bounces back up to 145, I can sell it right there if I think it's going to drop back down. If it continues higher, well, great. My average buy price was 140 instead of 150, like my first order was. If it does drop down all the way to 100 and my average so far is 140, I might be pretty upset, but I'm buying 5,000 at 100, which weights the average buy price considerably towards the lower purchase price. This is a reliable practice when you're staggering your orders like this. I would recommend doing this to the extent possible. Don't go all in if you're not confident in what you're trading. That's very important. If you're not confident in what you're seeing in the chart, don't trade it. There's always going to be another trade. There's no need for you to go and lose money today when you could have just hold on to it and waited to trade the next day or the day after. Markets do go flat. Markets do go crazy. If you're not seeing a trade, just avoid it. We'll take a look at a couple of other coins here just for fun, since we did look at them a bit earlier in the series. Potcoin has been getting a lot of attention lately, for a good reason. We're going to zoom out a bit here and take a look at why. Over the past few months, there's been quite a bit of activity on Potcoin. As we can see, we are nearing this point that we turned around at here. I would expect the price to at least stall out here, if not turn around and start going the other way completely. We did go higher though, so we might be looking at some pretty decent price action between now and say the end of next month. It's kind of hard to say. I haven't done a lot of research into what's going on with the coin. If I had, I might see something that would inspire a bit of confidence in it. Right now it looks like we're probably going to see something like this again. So we might be looking at another decent spike up here. Could even get as high as the previous one, up in the close to the 7,000 Satoshi range. But anybody buying up that high is going to be pretty disappointed, from what I can tell, when the price drops back down to most likely the 2,700 range at the very least. Well, at the very most, I guess you could say, or more likely, from my point of view, this level here, at least for a bit, the 1,200 range. So my point of view, from here on out, it's risky trading. I don't think I would pick up any more unless I was willing to spend time watching it and paying close attention to what's going on with price from one moment to the next. I do have a few of them, and I picked these up yesterday and stopped paying attention. This is what happened. It came back down to a previous resistance. I was assuming it wouldn't really drop down below this, and I assumed wrong. We're right here right now, so I'm kind of torn between picking up a bit more to lower my average buy price or cutting my losses in order to help me decide. Let's see here, 46, 42. So my average would have been about 44, and I'm very uncertain right now, but I am in profit. I'm going to hang on to it for now, but I am going to keep an eye on it. If we drop below the 4,000 mark, I'll be out. Well, we'll say anywhere between 3,800 and 4,000. That's where I'm gonna be looking at getting out, unless I see something in the chart that makes me more confident in my trade at that point in time. For now, I still think we have a decent chance of turning around somewhere in here before we actually get down below 4,000. Another coin that someone was looking at mentioned it to me, Hunter coin. This coin I know nothing about. Don't need to know a thing about a coin to trade it though. So we're going to look at the big picture. We see very high price here at the beginning of trading on FloX. Huge drop, and we're not seeing very much after that. Let's zoom in a bit, give us a better idea of what's been going on lately. Zoom in a bit much, I think. So let's refresh. Alright, just going to refresh the page here for a second. Well, this, to be honest, paints a nicer picture than what we were looking at on the all-time chart, for the short term at least, but it's still hard to tell. If we were to draw in some basic levels here, I would say we would be looking at something around here in the 1500 range, another one up here around 28, and perhaps possibly something around 34, 3500, between 34 and 37 we'll say, but we'll have to see what the price does here. It looks like it might be turning around, which would indicate that we might have another important level here, and that could mean that we'd be retesting it soon enough, perhaps. If we look at the bottom here, see what we've got, consistently rising bottom. That's pretty much a trend line. I'm not going to take the time to go into TradingView to draw that out, but I think you can see what I mean here with the upward slant here at the bottom of each dip that we're seeing. The bottoms keep getting higher and higher, right? I would expect us to come back down around here pretty soon to test that bottom again, but you never know, we could shoot up a bit first, but I have no faith in that happening. I'm looking at a retest of the 2000 to 2500 range sometime fairly shortly, maybe bounce around the 27 or 28, but in this area here. Remember, the support and resistance zones are flexible. You can't rely on an exact price to turn it around at. Now, there are a lot of technical indicators, as they're called, that can help us navigate the support and resistance lines. A lot of them are pretty popular and used quite often by a lot of people. We're not going to get into those today. I'm getting ready to wrap this up. I think that we've got a pretty good base on where to find those support and resistance lines in order to decide where to buy and sell on a short term. The same applies to the long term, but not in the same sense. Today I really wanted to focus on the shorter term, and as you can see, we've got some good profit to be made between these lines here. Even the smaller lines, if we go between 158 and 150, that's profit. Between 146 or even 144 and 151, that's profit. And when we get lucky and we hit 144 and get all the way up to 160, that's plenty of profit. So play around a bit with what you're seeing on the chart. Try to get a feel for where these support and resistance lines here. I'm actually thinking I might put one in right here. Don't be afraid to modify your charts when you feel the need. We can do things sometimes, see things sometimes, and later realize that we were just looking at it wrong, or we weren't really seeing the big picture. So, try to give yourself all the advantages you can. Be willing to be flexible with your lines, and be willing to accept that your line isn't a concrete point in space. It can be moved. That's going to help you understand as well why sometimes you'll take a trade, and even though you know the price is going up, it's going to start going down and you're going to panic and sell. A lot of people do this. It's something that you need to learn to control. You need to set yourself some rules before you start. How much are you willing to lose? How far down are you willing to see the price go before you cut your losses and get out? Always be willing to cut your losses and get out, because there are no guarantees in any market. Too often people will hold a trade until they have nothing left of it, and that's not how you make money. So hopefully I was able to convey the concept that I'm trying to get across here in a way that everyone will be able to take advantage of. If there are any questions, feel free to ask in the comments section, or hit me up on the Burst Nation forum. My username there is the same as my channel name on YouTube, whatever you say, man. And I'll be glad to field any questions or comments you might have. Keep in mind that this is an introduction. We're going to go a lot further in depth into all of the things that we've talked about so far, but we're going to be doing this one step at a time to make sure that we've got a firm grasp of things as we move forward, before we move forward. Don't really want to have anyone left behind. So if you, again, any questions, do ask them. I will try to address any questions that are brought up. If not in my next video, then in the next video. But if you, again, any questions, do ask them. I will try to address any questions that are brought up. If not in my next video, then in the next video. But if you, again, any questions, do ask them. I will try to address any questions that are brought up. If not in my next video, directly in the comments or in the forum. Thank you very much for watching, and if you haven't already, please subscribe, and feel free to give me a like if you enjoyed or learned something.